to force the Fed's hand to cut. They cannot have the Fed not cut in December. And if we don't get if we don't get unemployment reports, if we don't get other key indicators, that could put them in a situation we got to wait for the data to be data dependent.
That's a great point.
And then they'll be chasing their tail in 2026 once the data starts flowing. So this needs to get done over the weekend or early next week.
That is a great point. Basically, you're saying the Fed needs to confirm with the BLS labor market's weak, even though they already know it's weak. But that confirmation
just can't give Powell or the rest of the voting members the ability to say that we need to see the data. You can't give them that excuse.
It's fair. It's a fair point. I agree.
And I will tell you, I saw two big things today. Two very big things today.
Okay.
BMNR getting bought up by two big institutions. Now, I don't know if it's true or not, but it seems like they're both very true.
No, so it's true. I don't think it matters.
Oh, it matters.
No, it doesn't matter.
Yes, it does.
Okay, so you tell me why JP Morgan buying BMNR matters.
One, because I think it's going to act as somewhat of a backstop for them getting in and Vanguard getting in the mid-30s. That's the first reason. Second reason is, and you can take this one a grain of salt, I do think that it provides a level of not authenticity, but a level of not clarity. What's the word that I'm looking for? Assurance, maybe, that this is not fake type thing, because JP Morgan is known to be very conservative. The fact that they're buying into this kind of solidifies the Ethereum idea of everything going on stablecoins and tokenization.
So JP Morgan and Vanguard aren't opinionated fund managers. A lot of this is passive flows. A lot of this is from market making activity. From my understanding, like Vanguard the other day took a 5% stake in Opendoor. That's not Vanguard being bullish. Jane Street took a 6.2% stake in Opendoor. They don't.
Where is Opendoor? And that guy that called Opendoor at 82 cents was just on the Compounded Friends.
Yeah. So
whatever his name is.
To me, Steve, when these big funds come out and take a position, they're not like Cathie Wood that is subjectively saying, I like BMNR, I'm going to take client capital and put it into BMNR to get a return. They're buying it because they kind of have to buy it. So I think these headlines are just misleading a lot of people. And I don't think that's why it was up 8% on the day. I think it was up 8% on the day because Ethereum started running, altcoins started running, and BMNR is the best proxy.
Yeah, but you don't think that that's a reason Ethereum started running today?
No, because that news came out at 9:30. That news was, you sent me that tweet in our text message at like 10 a.m.
You didn't know about it before that?
No, I mean, I saw the headline when I woke up in the morning, but then I saw you texted it to me as well. But my point is, JP Morgan, like Jamie Dimon has become very bullish on stablecoins, 100%. And he's saying a lot of good stuff. But that doesn't mean JP Morgan as an institution is like, we love Ethereum. So
I'm wondering what funds, I'll do more research on it. I wonder what funds BMNR got added to from them.
It's great to see buying pressure on the stock, and that from that perspective, but this does not mean that JP Morgan is like, we love it. I mean, they'll sell it tomorrow if they they're not making a subjective. It's like BlackRock when they take positions. I'm not saying they love the stock. They have to buy these things for passive ETFs and for market making activities, and because they have to be custodians for a lot of their high net worth clients on some of these names.
Did you like the title of the PLTR article?
Oh yeah. So Steve has his new article.
I threw it in the private for you. I was trying to figure out a way to say I don't care, but I don't think it would have gotten published. So,
well, did you give it a buy?
No, but look at the title.
So you're not bullish enough. You didn't give it a buy.
Look at the title.
That's not, no. Where's the buy rating?
Long-term investors shouldn't worry.
Steve, you can't have your cake and eat it too. You can't say
I absolutely can. I'll buy two cakes. I'll hold one in this hand and I'll eat this one. I absolutely can.
You can't say you shouldn't worry, but then say that because at that point you're not saying people should buy it.
But because I don't think it's in buy territory right now. But I did say if it gets to a certain point, I would start buying again.
What is that certain point?
I think I put around 125.
That's a hell of a drawdown.
I said that I think it's going to range between 150 and 200. And if it got to 125, I would probably start buying again. I'm pretty sure those are the numbers I put at the end. But look, this was one of the most, if not the most incredible quarter I've seen from a company in years. This rivals NVIDIA's quarters to a degree. I mean, you got to give it to NVIDIA because of the sheer size that they did. But outside of NVIDIA, I've never seen numbers like this from customer growth and deals. And I made the argument that I think this is going to be $1 trillion company in the future. And when you look at their deal book, you look at the acceleration, you look at the 134% net dollar retention. I said, I don't think the S curve on revenue has even happened yet. And these deals are not part of the 134% net dollar retention. And when we start seeing that in the back half of 2026 and then early 2027, I think you're really going to get a crazy S curve on revenue. And at their margins, this is a company that I think by 2030 has the ability to be doing, what did I say on the projection? Just over 20 billion. If we go to the last chart that I made, projected revenue and projected free cash flow, I made my own assumptions and I came right within where the two most bullish analysts are for revenue. And I think that in 2030, they can do 12.9 billion of free cash flow. And I think they'll grow into the valuation and surpass the valuation in the next 5 years. I just don't think it's going higher than the 207 or wherever it peaked at the other week right now.
But do you actually think it gets to 125?
I don't know. I think that today if today didn't reverse, I think there was a great chance. I don't think it's getting below 150 right now.
That's my thing. Again, with Palantir, we all know it trades at an expensive multiple. That's obvious. But I was actually saying this before you came on. The Burry short is really weird because when Burry is shorting, let's just call it short, puts, short, whatever. When him being bearish Palantir and NVIDIA is essentially, in my opinion, being bearish the stock market because I think those two companies are so intertwined with the S&P 500. You might as well just go short the S&P 500. Now, obviously, he thinks that Palantir and NVIDIA's multiples are too aggressive, and Palantir in particular because he has almost $1 billion short. But I don't believe, and maybe I'll be wrong about this, I don't believe Palantir independently collapses without taking the market down with it, or rather the market has to collapse to take Palantir down with it. Same thing with NVIDIA, because I think they're two important stocks. They're not like Oklo that could go down to zero tomorrow and no one really cares.
Here's my problem with what Burry did, okay? I think it's one thing to short Palantir at 200, okay? I wouldn't do it because I'm not crazy, but I think that there's a probability that fits a model that you can make money doing that. Shorting NVIDIA is crazy talk. When we've listened to the earnings calls, we've read the transcripts, we've seen everything, right? You and I have seen everything with the big four. All roads lead back to NVIDIA. Like, how are you shorting NVIDIA here? Especially with the backlogs.
But that's my point. Like, I don't think Palantir can get to 150, 125 unless the market takes it down. I really don't. And so, like, I bought before earnings at 172. I know we got to like 169 today, but I think for us but that was when the S&P was like, right. So I feel like if we get to 150, 125, S&P's got to be down minimum 7-8%.
Look, I do believe that Palantir is going to trade between 150 and 200 at this point. I said that it's going to trade sideways for a while it grows into the valuation. The fact that they couldn't blow out, because remember, the big sell-off didn't happen the day of earnings on Monday. So the fact that they couldn't blow through all-time highs on the most incredible earnings report that they did, to me says that a short-term top is in or a mid-term top is in. Now, the question is, what range does it trade at while everything happens? I think it's between 150 and 200 because the fundamentals are so good. And this is my projection for their revenue and free cash flow. And I think that I'm pretty spot on. Now, look, time will tell. But if you go to Seeking Alpha and you look at the revenue projections, the only two analysts that are willing to put projections out from the street are just over my number at I think 20.6 billion for 2030. I mean, that's a big number. And when you think about this, and then you think about going forward past 2030, I truly believe Palantir is going to be $1 trillion company, which is what, 120% return from here. It's just a matter of when we get there, and I don't think we're getting there in the next couple of years. I think it's going to take several years to get there. But I'm not disagreeing that Palantir is. I'm not saying that Palantir is going back to 50 or 60. All I'm saying is I think it's going to trade sideways for a while within a $50 band, and then eventually, when the fundamentals come up, it'll start going up again. That's all.
Let's get Sam on the show.
Do not have anything to worry about, in my opinion.
Sam, what's up, man?
Yo, dude, I'm not gonna lie. I got scared this morning. I got so scared that I trimmed some stuff. And the reason why I trimmed stuff
was
is because I'm looking.
This morning?
A little bit of panic can, but it wasn't like big that I trimmed or anything in terms of portfolio size. It was mostly focused on the themes that are running, right? So I was looking at the 50-day moving average in SPY. I've been looking at that thing for a while. We broke the 20-day moving average very recently, and then you had that big volume coming down after that. And one thing that I noticed today was that crypto was strong all day, right? So crypto basically bottomed well before the market did. And I actually posted a tweet last night saying that, hey, look, or basically saying like, look, there's some news that's like falling under the radar over here that the Senate's going to basically vote for ending the government shutdown this weekend. I think it said it was supposed to be today or this weekend. I don't know which one. But just looking at the moving average, the fact that it was supporting the 50-day moving average on SPY and looking at the technicals for other things and crypto being strong, it didn't necessarily seem like we're going to start plummeting further downward. So I made the decision to basically reverse the trims that I've done this morning. And I actually also got back into BMNR like 39.50.
Wow.
Yeah.
Back in.
So remember, I sold at 50 and I'm back in. It's still a trade. I don't want people to think like, you know, this is like a long-term hold or whatever, but
no, you have to join the cult.
No, okay, so
Tanner's in it, Chris is in it, Steve is in it. You got
the fact that I'm in the cult. Out of all people,
I already have some Ethereum. I already have some Solana, Bitcoin, XRP. Like that's my crypto holding, and that's in a wallet, and that just stays there. But dude, you got some upside over here if this thing really recovers. You already have the good sentiment, like you mentioned this morning. I know, like it doesn't really matter if like JP Morgan would ever buy it, right? But the sentiment is what's going to matter. The sentiment is the part that's going to matter the most in this. And the sentiment is going to push the stock up if it does. But also, it's the inflows of crypto. I mean, you would think that crypto would stay below 100,000, but it didn't. And the market basically bottomed as soon as it sniffed out the news that, oh, is my mic too loud?
No, you're good. It's a little loud, but.
All right, I should have fixed it.
Okay, good.
So, yeah. When it comes to certain things, then yeah. But at the same time, I did not touch the core positions, so that always stays there. But I still got my trading portfolio.
What price are you looking to exit on BMNR?
I don't know. It really depends on the charts for Ethereum. Right now, Ethereum is still below the 50 and the 20-day, I believe. Yeah, it's still below the 50 and 20-day. It did reclaim the 200-day moving average, so that's looking pretty bullish. Bitcoin has a bit of work to do. Bitcoin is still below the 200-day moving average, so that 200-day moving average is around 110K. So we got some work to do, but it's very clear if you look at the correlations of crypto when it comes to Ethereum and Bitcoin, that Ethereum is just outperforming the last 3 days. So something to consider being in this trade. But if it's like a long-term thing, then like this is all just noise when it comes to that stuff. So,
do you think in the morning? Now we know it's kind of the shutdown stuff, but do you think in the morning there was fear about the fundamentals of this bull market? Like, is that what would cause you to feel a bit more worried?
Well, what worried me was were the moving averages, right? So we haven't tested the 50-day moving average since May. on the S&P 500. We barely grazed it the Tuesday, October 14. But literally May was the last time we hit the 200-day moving average, and we had a crazy bounce from that, right? And I'm not saying that we're going to have a crazy bounce, but these algos look at this stuff, and a lot of big money looks at this stuff for entries, right? So if I would have said that if we closed below the 50-day moving average, which we have not had since the bottom in April, that would be something to be a little bit worried about with certain positions, right? But dude, you saw that massive buy up in the middle of the day. Like, that was insane. That was an insane buy up. There's some of the wolf guys that basically bottom ticked NQ futures on that thing, right? So when that happens, I don't know, wait for this weekend, man. I think the shutdown's going to end this weekend. I mean, you're already getting talk, and you're getting like a little bit of banter back and forth and acknowledgement. You know, we need like a kind of a bipartisan, we need to end the shutdown, but actually working toward a solution. I think that really means a lot for the market. And I think the market's front running it. And I think crypto was sniffing that out.
I have a question. I just saw the SMCI is under 40. I think I'm going to have to take a very hard look at this.
I'm actually surprised it got under 40. It's crazy.
Look, their fiscal year guidance is the same. It's just the street had a negative reaction even after they gave preliminary guidance.
I mean, I'm looking at Eden and Boring companies like Johnson Controls and seeing what they're doing on the data center build out.
Yeah.
I gotta tell you, SMCI under 40 looks very interesting. But that's something that I would have to hold for 2 years.
Speaking of the data centers, Sam, let's get your take on this one. IREN. So I couldn't watch the earnings because Elon was live, so Sam got to stream it. And
no, it's all good. It's all good. So the earnings were actually good. Like, when it comes to this particular earnings, I don't think the financials really matter. Like, almost all of their revenue is from Bitcoin. Right. So they only had like $7 million in AI cloud, but that's kind of expected because they're still building out the AI cloud and making the pivot. So there was like a lot of negative connotation with that on Twitter, where it was like, oh, look, this is all they make in AI cloud. Well, yeah, because they're going to be wrapping it up. But then now they're projecting, I think it was about $3.4 billion ARR by the end of next year. And a lot of that is with Microsoft. Microsoft is $1.9 billion ARR. So I thought that was very surprising. However, I do think that during the earnings call, there's a lot of NDA with the Microsoft deal that they can't say certain things. And like, they're clearly not going to say things in front of whatever deals are going to come up for AI cloud. But I don't think the market really heard what it wanted to hear. And since the market was risk off today, high beta flying, this, NBIS, and Cypher, and all those names were being sold off pretty hard this morning. But once you kind of got that reprieve, and also the news from OpenAI that they want the chipbacks to be extended for data center build out, I think it's mostly the market sentiment. Once that came back, of course, his name came back. But keep in mind, I know there's like a lot of battle between like Nebius and IREN, which I don't see why there has to be a battle with this whole situation. Like, they're both going to be great companies. Nebius is up today. It's up like 1.5% today. IREN and Cypher are down today. Now, who knows if that's actually going to hold, but that's the first time that's been the case in like a week, right? Ever since last week, you saw the deals come in with IREN and Cypher, IREN with AWS, Cypher with AWS, IREN with Microsoft and Dell. Dell is more going to be a payment that IREN is doing versus anything. But you saw Nebius was just on a massive downtrend since then. So it was like, what's the market thinking over here, right? So today was probably the first day we saw that reversal in terms of leadership. So we'll see.
Do you think IREN deserves to be trading at $60? Like, is that a good valuation for it?
I think there was a little bit of a reality hit when it comes to IREN. I think there was a lot of expectation coming to the earnings. This thing was like around $80 after hours the other day. There was a lot of excitement coming into the earnings, and to be honest, there's a lot of retail in this too, right? But I think a lot of it is really attributed to like, we want to see the stock continue going up on this breakneck rally, and it kind of broke that momentum today. So I guess it puts people a little bit worried, like, hey, is this going to continue performing from a price perspective?
But you're not adding at 60.
No, I'm not adding a 60.
So what does it have to get to for you as a bull to add?
Well, I'm basing it off the charts, right? So
Okay, so what price on the charts? Just make-
well, right now we got the 50-day moving edge at 50, right? We broke the 20-day moving average 62, and we held it pretty nicely today, which I was kind of surprised that happened. If we get to 50, I'll probably add. I think I added the other week at like 53, 54. So I hate to say it, but I'm not going to add here. It doesn't seem like it's a great idea, risk reward to add here. And you could see, like, just in a matter of a couple of days, this thing can just drop.
What about
Right,
Nebius?
so-
Nebius at 111 to you, is that a value add or no? Because I'm curious.
Depends
from
on the
you,
market,
because
so.
you are in both of these names.
Yeah.
I'm curious. It's different for someone like me that doesn't have a position, but for someone that has a position, like Robin at 140, I wasn't adding at 140 objectively.
Yeah, no, I didn't end up Robin.
So same thing for you, like Nebius at this level, I ran it. Like, are these at all attractive even as they're down from all-time highs, or you're still not enticed?
You know, I said the other week that Nebius is still a buy for the long term at like 120, 125 when you would ask me. I still think it's a buy for the long term. But I also think we have to be realistic, guys. Like, we are on a breakneck rally with some of these stocks, and nothing goes straight up. The realization and the market being aware of the momentum and also the fundamental momentum of these stocks is already there, right? This isn't like, holy crap, Nebius is at $24, let's pump this thing up, or IREN's in like the single digits, or Cypher's in like the low single digits, let's pump this up. The market realized it, okay? So if you're in something a little bit bigger than you should be, then maybe that's something to consider to DCA over time. But I mean, if the bull market continues, then it could probably keep going. However, I know there's like a lot of people criticizing Twitter. It's like, I'm not going to name the person, but some people are like saying that they're going to add to like IREN at like $30, $40, $50. And I wouldn't dismiss that. It can happen. It can happen. Like, if we're down 10% from here, you saw what happens to these stocks when the market's down 1 or 2%. How can you be realistic and think that we can't visit there if we have a 10% correction, which we will get one at some point? The question is when, right? Like, who knows? What if SPY closed below the 50-day today? You think these stocks will be back to green? Probably not.
So here's a question for you, but Steve, I'll give you the first jab at this question. Steve, you still think S&P to 7,000 by end of year? Yes or no?
Yes.
Okay, Sam, do you still think 7,500?
I still got those contracts, man. I still got those.
You have contracts for 7,500?
No, not S&P contracts, the prediction market contracts. Yeah, no, I still have those contracts. I'm still gonna wait, right? Like that was a bet I was willing to make 7,500. Honestly, you need these pullbacks to get.
You do. That's true.
You need these. You need the reload. You need the sentiment reload. You need the froth taken out the door. Right? Like, IREN getting $80 seems a lot more probable now that we pulled back below $50 this morning, but it was unprobable to come into earnings and continue to $80 after it was like, guys, that was the overlying thing about the earnings call. And I think retail got hit with it, was like, look, this is going to take years to build out, and it's going to be CapEx intensive. They already raised they're planning to raise $400 million through the end of October, which actually I think they already did. Another $200 million. They already raised $1 billion the other week, and they're gonna raise another $1 billion. They're gonna raise it. I don't know when. I think Franz, or I forget the name of the guy on Twitter, does really good DD. He thinks it's gonna happen before the end of the year. I think it's probably gonna happen maybe like beginning of next year, at least when the rates come down. I don't know if it's going to be a 0% convertible debt. We'll see. But, guys, these are CapEx intensive businesses. And if the mega caps are issuing debt, you better believe these guys are going to issue debt. And,
well, that's another thing I saw about IREN. They're getting ready. This is what I heard. They're getting ready for another offering of over $1 billion. Someone was looking at their 8K and trying to piece things together.
No, it's going to be $1 billion.
It doesn't matter, though, because it's good dilution, theoretically, right? Because it's all...
Yeah, I mean, there was also something from their earnings that I noticed, that they were actually profitable, but I believe they were profitable because they had a write-down that was able to make them profitable. But again, like, this isn't like the type of company where it's like, I'm going to buy them based on their income today. I'm buying them based on their adjusted EBITDA margins later on, 85%, right? And there's a lot of back and forth. There's always going to be back and forth, and it's going to be a bumpy road, and it's not going to end here, right? It's going to continue to be bumpy. Like, these are the type of stocks where, like, they're going to be bumpy roads.
Steve, why are you still 7,000 S&P?
Because what really changed?
That's a good point.
Think about it. We heard from the most important companies. The only real important ones we still have to hear from are Broadcom and NVIDIA.
Yep.
Everybody has increased their Q4 earnings. Everybody is going to have pretty much record years. There's nothing to make it look like the CapEx spend is going to slow down. You have a 700 billion cloud backlog from just the big three. And the broader market is also putting up good earnings. So if the government shutdown actually ends in a timely fashion and you can get these damn reports out and force the Fed's hand to cut, and as long as the Fed cuts and they don't get behind the eight ball of just saying we need to be data dependent and wait till the data comes out, I don't see anything that's going to stop this from going to 7,000. I really don't. I think it holds up. So we'll see. And pullbacks are healthy. This is why I always say don't freaking shoot your entire wad and go all in on one shot. Just freaking scale your way in, because you never know when the market's going to retrace. Nobody can predict that. I don't care who you are. Nobody can predict minute by minute what's going to happen and when algos are going to get tripped. So, keep in mind, this sell-off happened after some really great earnings. So this was a good buying opportunity, I think.
Even Hood had amazing earnings, and it went down to 120 today. Why? Because the market was down. It was because the market was down. The market was down. That was the only reason why it went down. Like, those earnings were freaking amazing. I would say that, in my perspective, out of all the fintech companies, it's you just cannot deny the fact that Hood is probably one of the best ones.
Dude,
and I'm sorry, I'm not a SoFi bear, right? Like, I'm not a SoFi bear, but what I know SoFi can get into other products, but maybe I'm biased because I'm a Hood shareholder, but this is a stock that if the market went down, I would definitely add to this one, right? Like, they are changing the trading and investing landscape as we see it.
Yes, and I'm not a SoFi bear either. I actually bought some SoFi yesterday. But goodness, it's not Robinhood. It's just like, it's a different freaking league, bro. It really is. Vlad did 3 interviews in the past 24 hours on independent media outlets. Love Noto, but outside of CNBC and Bloomberg and Yahoo, this guy does not talk to any. And again, that's not a bear case. I'm just saying, when you're building a generational company and you're trying to get the message out there and you're talking about everything and you have these exciting things to show to the world, it's just, they're 2 different companies.
Dude, he was also on the Open Door conference.
He was on the Open Door. Dude, and
I was so surprised. I saw it after the fact.
And he's so smart because he knows a lot of people that bought the Open Door rally when Eric Jackson was getting the whole thing started was on Robinhood. A lot of that was on Robinhood. So he knows that being good with that community, it's like, politics, making sure you have alliances and making sure there's a segment of the market that has a friendly opinion of you. Very important. And it's important for trading volumes, important for the overall growth, important for user growth. And I think Vlad's just playing this on a different level. By the way, folks, speaking of SoFi and BMNR, Triple V sent me a text right now. He got assigned puts on BMNR and SoFi. BMNR, he's officially in at $40, 100,000 shares.
He wasn't in?
Today, yeah. SoFi 28,
oh, wow.
222,000 shares. So
that's
he's in
chump
both
change.
Now. Yeah, he's after that. He said not a ton.
Not a ton.
just a couple 100,000 shares, but he's in BMNR and SoFi. Steve, what did you think of those Robinhood earnings?
They're incredible. I mean, is there another word we can use?
Does it make you want to buy it or no?
No.
Is it because valuation is still your concern on Hood, or?
I mean, I don't. What's the market cap right now?
117.
It's a little rich.
So what would Hood have to? the reason I'm asking, because you're big on SoFi. And again,
Right.
I like SoFi too, but I think everyone can see there is a different league that Robinhood is playing. I mean, Robinhood had 20 billion in net deposits. SoFi had 3. Which is like, again, love SoFi.
Well,
great. But
Well, hold on.
in the past 90 days,
Hold
one
on.
had
That's
20
not,
billion, the other one
that's
had
not
3.
exactly a fair comparison because SoFi's was a bank deposit.
I
That's
don't
not
care
a
what,
raffle.
I don't care how they got this is a financial services company bringing in money from other players. All I'm saying is one of them is
But once again, SoFi's not counting anything going into their brokerage into deposits. It's strictly bank deposits that they're showing you.
it's okay. Okay, sure, that's fine. But what do you think? Brokerage was another billion? Because I don't.
Oh, I have no idea, but I'm telling
so-
you,
but
the
then-
3.3 billion was strictly bank deposits.
Okay, so then we don't. Okay, so
We don't exactly know the number.
Let's say the number is 5 billion. That would still
Whatever
be
it
8
is.
billion of deposits versus. My point is just the company is figuring out how to get money from every single area, JP Morgan, Bank of America, all these high net worth individuals, and bring it into Hood. And you got SoFi, which is supposed to be doing the same thing, and they're doing it at a good rate at 3 billion. But we're talking about a 6x difference on Hood.
This is what I like about Hood. Okay.
But my question was, if you love SoFi so much for this whole financial services idea, when you see those numbers, yes, there's a higher valuation, but does that not at all make you a bit enticed to at least sell some puts on the thing and get into it?
What I like about Hood is the fact that I'm just doing quick math in my head right now. Let me put it back on an annual.
By the way, when Hood brings up banking next year, those deposits are going even higher. And I know it's not always the fairest comparison. I'm just saying when we have 2 fintechs and we're talking about getting money from X to Y, Hood is doing it at a just accelerated rate.
Is that already available in New York? I thought I remember hearing that during the
For some
conference
people.
call.
Yeah, for some people.
So Hood's operating margin is like 48.5%, 49%, I believe, if I'm doing the math correctly. The fact that their total revenue is 4.2 billion and their operating income is 2 billion, I mean, that's an insane margin. And you and I made that point when we had the discussion with Tanner and Chris that there's no comparison from the numbers. I mean, Hood is severely surpassing SoFi in their profitability because of their margins. And look, I think Hood is running a phenomenal business. It's hard for me to get around the valuation based on where I see the legacy banks trade. And I get it's not legacy bank, but if you look at the sheer amount of revenue, net interest income, and operating income that's generated across the board, I'm having a hard time with Hood's valuation. Now,
Which is fair. That's a fair point. I don't think that's
now, to be fair, I haven't added to SoFi in years. Maybe not
Really?
years, year and a half, maybe something like that.
You didn't add this whole year to SoFi?
I don't think so.
I
I'd have to check, but I don't think I added to SoFi this year at all. If I did, it was in the beginning of the year when it was around $10. But I don't think I had because I was buying Nvidia then.
So basically, what you're saying is you bought SoFi at a low price. You picked
Such
SoFi.
a low price that
you picked SoFi over Hood. Hood ended up running up, and so now for you, it's not worth because you already have the exposure to the entire industry of new age.
And I think SoFi can be a catch-up trade in 2026 for the stupidest reason. Okay, but it could play out like this. The fact that Hood ran so much, if SoFi gets into the S&P in the first half of 2026, they could get a catch-up trade because everybody's going to be like, the people don't look at market caps like us. People don't look at valuations, okay? They simply look at a share price on a screen.
Yeah.
And they could have the logic of, okay, I can get 4 shares or 5 shares of SoFi for every 1 share of Robinhood. And if they get into the S&P, it's going to do the same thing as Robinhood or something similar, and they'll be able to make a larger return. For that stupid reason alone, I think SoFi will put up a better year than Robinhood next year, simply on stupid logic.
Look, I bought SoFi yesterday, not Hood. So I agree with you. There is no disagreement. My only question is those earnings were so freaking good.
Hood's earnings were amazing.
That it makes me think like, are you at all interested in just eventually getting a position? But I understand the valuation right now is too much.
If it retraces and sells off, I am interested. At this level, I'm not.
That's
What's
fair.
your level?
I'd have to really
Oh,
do
$3, you know, little
No,
maybe $2 a share.
no.
Oh, yeah, a new low, a new all-time low.
No, maybe like 70, 75, that area. I'd be interested.
Do you think?
Would you actually be interested at 75 or
Yeah, I think I would be.
like
When
legit?
legit, like when I look at their operating income, when I look at their growth, and what I remember from the earnings deck when I went through it, and look, I'm looking at the net income right now. It is very interesting. If it retraced a good amount, I think I would be very interested in starting a position.
Sam, go ahead.
Okay, so you guys already talked about Palantir. If Palantir is like 120 bucks, the market's gonna be down, which I agree. There's no way in this world that Palantir gets 120 bucks without the market being like at least 7% down, like you were saying, maybe a correction. I think if there's a correction, it could be at like 100 bucks. Do you think that's the case with Hood? Do you think the market can be
100%.
up and Hood? Yeah, I would think so. I would think so too. That could happen.
If 2026 is bearish, it could wipe out a lot of people like myself that are in these, not wipe out, but I mean, just significant drawdowns, right? When you have these names, because they're so tied to the bull market. And I know that they trade at very high multiples. And so that's why when I hear Burry's going short these names, I'm like, he's basically saying the market's going to collapse. Because unless somehow something happens in Palantir NVIDIA specifically to cause them to collapse and the market to stay okay, which NVIDIA is 8% of the S&P 500, I think that's very improbable. And then Palantir is not that much of the S&P, but it's a very big chunk of the overall trading volumes in the AI trade. You would need a market collapse. So I think Burry's betting against the market right now. And if we get S&P 7,000, he might not be right about it.
I would even argue that, like you're saying, you are shorting the market, but it would be much more profitable to short the market or to buy SPY puts instead of buying puts and paying ridiculous premium on NVIDIA puts and Palantir puts, because the beta on those stocks are so high. You know how much the IV is on those compared to like SPY? Like you could make way more money shorting SPY versus those. And like you're saying, the AI trade for software is Palantir, and the AI trade for hardware is NVIDIA. My thing is that where does Hood fit in there? I don't think Hood is necessarily an AI trade, but if the market is bullish, that is obviously bullish for traders out there, and they make a lot of their money off it. And Steve, you also said that for just the share price standpoint, people might be more bearish SoFi versus Hood, and that's true, not only for the share price of the notional share price, but also the options, right? So the option ladders for SoFi is much cheaper per contract versus Hood. So people will load the boat on like $30 calls for 2027 for SoFi, but they're not going to load the boat for like $200 calls for Hood. Like it just, what do you think of the gamma squeeze that SoFi could have? There's much more potential for that to happen.
Yeah, look, it's stupid logic, and I call it stupid logic because it's exactly that. Like a lot of people just look at a share price, they look about how much they can buy, and if it moves up $5, what are they going to make versus putting the same amount in a stock that's 5 times more expensive? It's the wrong way to look at things, but a lot of people look at it like that. So
a lot of people do, but I think there's a bit more. I don't want to say the market's graduated from that type of thing. I think it was way more relevant, I think, before 2020, before the huge retail crowd came in. And I think a lot more people are aware now. But also, I think the options speak volume also from an institutional standpoint, but also like large retail traders in the market who are aware of the market cap. But like I said, like you can't you could buy way more $30 leaps on SoFi than you could with how much you're paying for like Hood calls, because the IV on Hood is very high.
Yeah.
Oh, the one thing I don't understand with Burry is, I understand taking a flyer on shorting Palantir at 200. That I understand, because the valuation to me makes 0 sense. But the valuation on NVIDIA does not look expensive. So when you actually do the research and you look at where everything is going and how much backlog there is, I mean,
well, you saw Burry's pictures, right? That he tweeted. I mean,
no, I don't follow him.
he pretty much gives it away for why he's short without saying anything. It's this picture right here. This is what he tweeted. No, just this whole circular finance. This is, to me, I think why he thinks it's going to collapse.
I like how he has Nebius on there.
Dude, he has everything. He has Figure, Nebius, CoreWeave, XAI, Oracle, Intel.
Why doesn't he short Nebius? I feel like that would be a better
What
short
are you doing? Saying
if
that
the market collapses.
at some point?
He's saying this is all bullshit, essentially. That's what he's saying, in my opinion. And
this is what my rebuttal is. Okay. It's not all bullshit, because when you look at what AWS, Azure, and Google Cloud did, and you look at their growth, and you look at their revenue, and you look at the run rates, and you look at the backlog, and that's just those three companies, and you look at the CapEx and cash from operations expanding each quarter over quarter, obviously this is not bullshit. You see Oracle actually tapping the debt markets for it. And regardless of what you want to say about Elon talking about potentially having to open up a fab, we know that we need so many more chips, and we know that all roads lead back to NVIDIA at this point. So I just don't understand what he's looking at for NVIDIA. Palantir, I'm not going to criticize, because I think he can do very well. If you shorted Palantir 190 and it goes to 150 or 160, you're going to do great. But is NVIDIA really going to like 150, 160?
but also he did not short at 190.
What price did he short at?
The only price he could have possibly shorted at was from 142 to, I believe, 185.
Yeah.
All right, so let's just say he shorted at 175.
Well, he's down on the short today.
Correct. But I would still say that has a better chance of playing out than wherever the hell you short NVIDIA. Out of the two, you can't say that there's a higher probability of NVIDIA crashing more than Palantir at this point. It doesn't make sense to me betting against NVIDIA here.
If you're shorting AI, there are so many other better things to short out there that you could just make so much more money on. And if he's wrong and the market continues going up and the VIX collapses, which it's yet to do, right? So we can either stay at 19 VIX or we can get back down to 15. I don't care what it is. Those puts are going to go down way more because the IV gets compressed. I know he's a very smart guy, right? And I know he was right. He was very right in 2008. However, he could be one of those people that gets it right one time, and then he's probably, I don't know how he's making money at this point. You know, maybe I think he was long a stock actually. Yeah. It's just, I don't know at this point. Maybe the funds are maybe people are just throwing more money at him and he's able to collect the fees on it no matter what. Because you got to remember that part too, right? He at the end of the day, if he's managing other people's money, he's collecting funds off of it. So if more people are throwing their money at him, does it really matter how good it performs? Right? He's still collecting a higher fee. So there's also that. But I don't know, he's predicted like 5 or 6 of the last market crashes or something like that.
Yeah, I mean, that's why the NVIDIA Palantir short is basically saying this is a bubble and everything's going to collapse. He's either going to be right or wrong on it. And I think based on the earnings picture, he might be wrong. Now, granted, that picture of the bubble of all the intertwining stuff, that stuff, I think to everybody is a little, okay, like what exactly? But when you dig deeper into it, there's a simple way to make sense of it, even though no one wants to hear this right now. But it's, will there be an ROI on all of this spend? And if Sam Altman says we're going to do hundreds of billions, as of what he said yesterday in 2030, 1.4 trillion is not crazy to imagine. Not at all.
I mean,
the other companies are already doing hundreds of billions.
I mean, is there an ROI on the spend? Look at the big three. Alphabet and Amazon post the numbers by segment. There's absolutely an ROI. And there'll probably be a bigger ROI in the future. Like, we've only begun to scratch the surface. And I think what Barry's getting wrong is technology does not stay stagnant.
Yeah.
Technology always advances. Moore's law is basically shattered at this point. And with all the advancements that we have today versus 5 years ago or 10 years ago, how much is technology going to advance from here to 2030? I just, how can you bet against tech? It just doesn't make sense.
What year do you think we need to see a very legitimate ROI? Like, I know we're already seeing it, but like 2027, 2028, what year has to be, oh, that's why Google spent $300 billion? Okay.
Let me ask you a question. Why do we have to have a significant ROI when, take Meta out of it, okay? These companies are not tapping the debt markets. And you look at how much more cash from operations is being generated than CapEx is being spent. If they just stopped increasing their spend and it levels off and they just go into maintenance mode, cash from operations is going to continue to explode, which is going to cause free cash flow to explode.
No, but Steve, that's you can't say it's 1989 and say they're going to start maintenance in 2 years.
I'm not saying it's going to happen. I'm just saying that.
Okay, so my question is, when do you think the ROI is coming then? If they're not going to start maintenance for the next 2 years,
I think it's already coming, and I think it's going to accelerate.
No, but the ROI, we haven't had that type of, oh my goodness, it's not search advertising.
I mean, you want to go into an oh my goodness mode. These companies are putting up 120 billion in cash from operations already.
No, but
what Steve, number do we need to get to?
You can't avoid it. If you're an AI investor,
what number do we need to get to?
I don't know what the number is. All I know is there has to be a time frame in which the market objectively says Google is making XYZ, not just because of their legacy business that is still doing very well, as you're saying, but because they invested all this money into Waymo, Apptronic, data centers, yada, yada, and now you're seeing the return. So I think that year has to be 2028, 2029. I think they have 3 years to figure it out. Right. But if they go into maintenance in 2028, by the way, the NVIDIA thesis falls apart. They need to keep spending for the next 4 or 5 years.
Well, that's not necessarily true, because the life cycle for these chips is about 4 years, right? So these companies always need the latest and greatest chips, and they're always going to keep buying them. I think Jensen Huang did discuss that, right? So the reason why NVIDIA was so cyclical back in like the 2010s and even before that was because most of their revenue was coming from the gaming sector and a lot of hardware that needed to be recycled every like 1 or 2 years, and that's why it was a very cyclical industry. But now that you're dealing with data center, this is like a 3 or 4 year life cycle. So
that's my point, Sam. If for Google to upgrade to Vera Rubin instead of Blackwell, they need to tell investors, hey, this is what we're seeing from all this money we're putting into these chips, which is why we're upgrading to I'm upgrading to the iPhone 17 because I can easily see what it's going to do for my life versus the iPhone 15. If we can't put that number into context, that's an issue in 3-4 years. Now, I think we need 3-4 years, but nonetheless, there has to be some level of ROI.
Well, let's also remember that they have more than the data center, the GPUs on their own. They also have networking, which is definitely something they want to keep in their ecosystem, especially with, I keep on forgetting the name of the networking unit that they released that's actually compatible with ASIC processors. That's going to be important too, because people continue buying them. That's all controlled by CUDA. So obviously NVIDIA is a hardware company, but if they keep people in the ecosystem to continue using their software that's compatible with other GPUs, they're still going to make money off that.
Yeah,
and don't forget, CUDA is high margin.
But CUDA is not bringing in the type of money that the chips are bringing in.
But it's keeping the money in there. And also on top of that,
it can't justify a 10 trillion. We're talking about NVIDIA 10 trillion, right? All of us think it can get it. They have to keep upgrading the chips and get Meta, Google, Amazon to keep buying the chips. Like, my question to both of you is, at what point do you think there needs to be a significant, easy, digestible way to say, hey, we spent this money, we're seeing the ROI, therefore we're going to keep spending this money to keep seeing the ROI?
Bring up the thing I have, please.
Yeah.
Just give me a number, because this is Alphabet's cash from operations. This is their cash flow statement. They've gone from 100 billion to 125 billion, and now in the TTM they're 151 billion from cash from operations, and they could finish the year at 160 billion at this rate. So what's the number that we need to look for? Do we need to say that they're going to be at 225 billion in 2027 or 2028, spending 80 billion in CapEx to generate a certain number of free cash flow? Because if they scale back into maintenance mode when they're done, and let's just say arbitrarily maintenance mode is 50 billion a year just to upgrade because they're no longer building out additional capacity, you're already at 100 billion of free cash flow at that point. So what are we saying? We need to be at 150 or 200 billion?
I think you're using cash flow from their legacy business.
But that's not just from legacy. Google Cloud's part of that.
No, I get it. But what I'm saying, we're only about a year and a half, maybe 2 years into them spending as much money into CapEx. I'm saying, I don't need to say shit. Sundar in a couple of years needs to have an earnings call where he says, hey, we spent 300 billion over the past 3 years. This is exactly why the company is growing at these levels. And if it's just, the similar businesses that have continued to do well for them, like search or whatever, like, that's why Zucks is getting hit right now.
Remember, they get to weave in Gemini to that. They get to weave in the data packages. Look, I wouldn't be paying for the Google package if it wasn't for Gemini and other products. They wouldn't be getting the monthly fee from me unless it was for that. So if you look at another subscription business and other things, that is really because of the AI offerings.
Yeah, so my point is just Google needs to clearly say that the AI offering.
Yeah, I'm with you on that. I'm just wondering, like, do we need to get it to 150 billion free cash flow?
Well, I'm wondering what year does that need to happen by? Like,
I think if they keep going at the rate that they're going, we need to see. The biggest thing for these companies is we need to see the data center build out plateau and go into maintenance mode. And I think that's the question that we can't answer right now because they're still in full blown build out. Like, we need to know in 3 years, this is going to be, we're not building data centers anymore, and it is just maintenance. Otherwise, you could see these companies at 150 billion CapEx spend a year. I mean, shit, Amazon's almost there now.
I get it, but like this, Amazon was dead the majority of the year because the street didn't know why they were spending this much on CapEx because AWS wasn't growing. Now AWS is back to growth, best since 2022. Street's giving it a little bit of more of a premium. Meta showing growth, but not really showing AI related. I mean, this is objectively, why is Meta down? The street has no idea how AI is actually accelerating their business.
It already is. It already is. Look at their operating income and the operating cash flow. It's still really up there. But the thing is that they're not building their they're not building their data centers and spending it to build a cloud like the hyperscalers.
No, but my point is, in terms of new lines of businesses, Meta has one thing going for them that's actually working, which is ads, which AI is helping. Don't get me wrong. The problem is the street is like, well, are you spending hundreds of billions for ads? Now, the other three get the cloud, which allows them to kind of subsidize and massage the fears. But the point is there has to be that thing. Like for Tesla, it's very obvious. FSD and robotics. That's why Elon's talking about building his own chip farm. The other four have to say, that's what I'm saying, in a couple of years, they have to be able to say, we developed this new thing because of all this spend. It didn't just help our search business or our cloud business. It helped create this whole new industry, right? We're talking about this fourth industrial revolution. That has to be apparent in a couple of years. We can't just mix that in with their cash from operations today and be like, well, it's kind of working. It's like, no, it has to be so explicit to get NVIDIA to 10 trillion. Otherwise, obviously that's not going to be there. Same thing with OpenAI, right? Hundreds of billions of revenue. Where is that coming from? I don't know. It's definitely not coming from just ChatGPT.com. And Sam Altman has us believing that it's going to come in some manifestation. But if it doesn't, the point is that's where I think Burry thinks it's a bubble. I believe it will. I just don't know what it looks like. And so I was curious for you guys. I'm thinking 2028, 2029, 4 or 5 years, which is 2-3 years, I should say, we will get a more explicit ROI.
I do think that, no, I agree with you on that take. I think we're actually going to start seeing the ROI late next year in 2027. That's when a lot of these data center companies are going to bring a lot of their stuff online. And that was something that IREN has said many times is that I think it was Sweetwater 1, which is one of their 2 data centers that are in Sweetwater, Texas, that is going to come online in the second half of 2026. And a lot of these other players is going to be the same thing. And in fact, when you kind of spec it out, that's when a lot of these data centers actually come online for Nebius, Cypher, and all these other companies. And that's when they'll be able to start meeting the demand. I do think 2026 is going to be a crazy year in terms of the stock market because the market's going to become impatient. And when it becomes impatient, you see what's going to happen. And when that ROI comes back, it's going to bring it back up. So when you're talking about the hyperscalers, though, it's already showing up. I mean, we have to take their word for it because they don't give us the specific numbers for AI products for each one of their clouds. But Andy Jassy continues to say it's triple digits. And then they're also talking about ASIC chips. So these hyperscalers on their own, which includes Microsoft and includes Meta as well. It includes Oracle, Google and AWS, they're all building their own chips, and those are much higher margins for them. That's going to improve their operating income based on that alone. So that's going to continue happening. Then that is actively being rented out by a lot of clients, and it's based on the demand too. So you have not only like just some Joe Schmo spinning up an EC2 instance in AWS, but you have these large companies locking in larger contracts because they want to lock in a cheaper price now. But it's going to continuously happen as they start to build and bring more compute online. Like, it's going to be a cascading effect in an upward direction. And on top of that, like you mentioned, Tesla and robotics is something that's going to become very important for Amazon and Mercado Libre.
Yeah, agreed.
And for a lot of other companies out there. So when you replace, 5 million robots, and that's going to save them so much money in the long run in terms of operating expenses, that in itself is going to expand the margins for Amazon and also Mercado Libre. But then you're seeing these other companies going to start adopting robotics to a certain sense, maybe not today, and I would say probably maybe not in the next couple of years, but that is going to start happening and accelerating by 2030. All this compute, people will still need to buy NVIDIA chips. Unless that's all a sham and people are like, you know what, we don't need robotics anymore. We don't need EVs anymore. Let's go back to gas cars. Let's start hiring all these people back because we need the people to run the warehouses. If that happens, the game is dead. But that's not going to happen, dude. You're going to have people who are, yeah, go ahead.
I agree with you. And same thing with IREN and Nebius. Like, they're not getting more of these hyperscaler deals until the hyperscalers are very explicit about why they're spending on CapEx. Right now, and Chris was showing this last night, if you read Meta's call, Zucks is kind of aloof on why they're spending on CapEx. I mean, to the point where Zucks literally says, hey, if we're spending too much, like, we'll scale back a little bit if we don't need it. And that's really got investors thinking, dude. Like,
I understand. I agree with that. That's probably the reason why the stock went down, because he was like, and I said this, it was like, he sounded like he was being defensive on the call, right? And no one likes to hear the chief operating officer becoming defensive. And I kind of got a little bit of that hint from the IREN call yesterday, where like they were sounding defensive, but only because he couldn't really say certain things from the non-disclosure
but Sam Altman was also sounding defensive.
Oh yeah, he was super defensive.
And that gets scary, right? Because it's like, he's saying, trust me, bro, we're going to be able to make sense of this 1.4 trillion. And all of us, unequivocally, if we're invested in this market, if you're invested in NVIDIA, AMD, you have to trust them, which is why that's my kind of broader thing of like, how many years does the market go to try to see if there's a real meaning or a reason to trust?
In Zuckerberg, I trust since 2012. Just saying.
I wouldn't bet against Zucks either, but I also don't think, even Brad Gerstner, did you hear him today? They asked him the Meta question. First of all, he said he trimmed Meta. Second of all, he said, I mean, I could play the clip, but he basically said, I don't know what Zucks is going to do.
Was it from All In?
No, from CNBC.
If he was on All In, I'm like 20 minutes into it.
I'll pull it up. But it was one of those things where we were watching it live on the market open. I'm like, damn, this guy does not know why Zucks is spending this much money. And I don't blame him. But he said maybe they come up with the cloud. And I was like, okay, we know they're not going to come up with
the cloud. They might come up with the cloud, but I don't think it's going to be the same type of cloud we're all thinking about. If it's anything, it might be maybe rolling out services for advertising or something like that for other companies to use, similar to what Amazon Prime did with their video ads. They did it with Roku. You might start seeing something like that because their technology is pretty powerful. If they start renting that out, or at least letting people enroll in their services, I don't exactly know how that's going to go. But if Amazon Prime Video is doing it, I would not be surprised if Zuck starts doing it.
I think we will see the return. I don't know what exactly that return will look like. I know we're already seeing it, but we're not seeing it to that explosive S-curve growth. Now we're seeing that in Palantir, which is why I think the market is giving it a because Palantir is saying, hey, you guys want to see explosive growth because of AI. We are showing you explosive growth with explosive margins in AI. That's why I think Palantir is getting the premium. And I think that's why it quite frankly deserves the premium. But some of these other companies, it's good growth. It's not explosive. And it's definitely not tangible. Meta is not showing you the tangible ROI. Google is making the investments in Apptronic and Waymo and searches, and Gemini is doing well, but it's still not super, super tangible in terms of, oh my goodness, this is like core. Cloud is a great business, but cloud at the end of the day is handling AI workloads for other companies that are implementing AI into their enterprise or governments, et cetera. So cloud to me is like infrastructure for AI. It's not literally a bet on just AI. It's very important and it's very lucrative, and they're growing super quick, especially Microsoft 40%. Google at 35%. But I think there has to be that next layer of like, what is it? And so when we had the internet, Google built the best search engine, Facebook built the best social network, Amazon built the best e-commerce platform, PayPal for about 10 years built the best payments infrastructure. Like you had all these different companies build on the internet the most amazing applications that all of us fell in love with and started using on a daily basis. In the world of AI, what are those applications? I think Tesla will have FSD. I think Tesla probably has humanoid robotics. Meta, Google, Amazon will dominate advertising. Palantir will have enterprise workflows. ChatGPT and Gemini will be the LLMs, Anthropic as well, Grok. But then what's beyond that besides LLM, robotics, and self-driving? Maybe AI personal assistants with Apple, right? But maybe it's stuff that we can't even think of. Maybe it's a new consumer hardware device like Zux was talking about that replaces the phone. That's an AI native. But I don't know. I'm betting there will be something, but I think it's going to take 4 or 5 years.
So is Meta a buy?
I don't know. Steve, is Meta a buy?
So if you don't have a full position, I think it's a great valuation here for it. If you have a full position, such as me, I would personally up what I consider a full position around 575 if it gets there. But you're trading at 18 times 2027 earnings here. Like it's the cheapest Mag 7 stock. And do you really bet against a company that more than a third of the global population uses its products? And the biggest kicker is, and I've listened to every Meta earnings call since I'd say 2018, 2019. Zuckerberg used to say at some point, do not get used to this, at some point, our growth in daily active users or monthly active users will stop. And at some point, we will get negative because we just won't be able to capture anymore. He stopped saying that because it just hasn't happened. And I don't know another company that has 3 to 4 billion people using their product.
It's not people, dude. It's not people.
I'm just saying,
I don't think it's fully
Just
people.
saying.
Those are bots. Those are
just
bots.
saying the
There's
numbers
definitely
that they're
a bot.
showing more than a third of the global population.
No,
It is
I mean,
a-
that's going to keep going up. It's not going to go down. It's going to keep going up.
So, I mean, look, from a financial standpoint, the fundamentals, it's very undervalued.
100%. I agree.
So if you want to look at it from just pure profitability and pure fundamentals, it's very undervalued, especially when you have companies like Broadcom that are bigger than it right now, that generate a quarter of the cash from operations. And Meta spends 110 times, I think, the amount of CapEx than Broadcom, yet it does an additional 20-something billion in free cash flow. It's just, the numbers are sick.
Steve had a great point last night on his channel. He said that if they just cut Reality Labs tomorrow, stock's up 20%.
Yeah, 100%. I mean, think about it. I don't even need to pull it up. Over the past 2 years, I think it's something like $195 billion in operating income they've generated, and the Reality Labs has lost $39 billion. They've still generated $150 billion in operating income in 2 years with a $40 billion loss on Reality Labs. They could come out tomorrow and say, we're cutting Reality Labs, staying on us. Sorry. Stock's up 20%. Maybe not 20%, but 15%.
I think if that Wi-Fi didn't go out during that presentation, I think it would be a lot higher. But that freaking Wi-Fi, man, I'm telling it wasn't the Wi-Fi, but I think that finicky presentation is literally what just stopped it from going up after that.
I wish they didn't have that presentation.
I think the glasses are a dud, dude. I really do. Sam, are you bullish on the glasses or no?
I mean, I think it's like a great alternative to buying the Vision Pro, which I think they're discontinuing, right? I'd buy it, but not right now. Like I'll buy it later on once it becomes perfected more. And I don't know. I got my warrants about Android OS. Apple's got to make a better competitive product. Otherwise, I find it very hard pressed for me to like buy an Android product or any type of Android derivative.
Oh, whoa. We have final trades. I didn't see this today. Whose final trade is Meta and whose is Exxon? Did you see this in there today?
Axon was a crazy dip.
No, Exxon Mobil, not Axon.
Oh.
Did
think-
you
I mean,
see this today,
no,
Amit, on
no.
CNBC?
No.
Hold on.
I think a decent amount of people are excited about Meta, though. But I wonder how many people are going to
I
actually.
put it in private for you. I mean, look, Meta at 608. Like, I mean, you're also talking to the wrong person because I truly do believe it's going to be at 1,000 at the end of next year.
Yeah, I mean, 1,000 end of next year. So you're basically saying it's.
Do me a favor, pull up my screen very quickly, and I'll show you why. I think I showed you this last night, Amit, or maybe I showed Chris. But if you put 1,000 share price on Meta, its forward PE is less than 30. So it's less than Walmart and Costco at $1,000 today. You're telling me that that doesn't make sense?
Yeah, but I don't think you can just compare it to those companies and say it deserves that price. There's a lot more quality or qualitative analysis that goes into some of these names.
I mean, Walmart and Costco do not deserve to trade at over 30 times forward earnings. Sorry, they're not profit centers. Costco has a 3% profit margin. There's more growth with Meta, more profitability, more buybacks, bigger margins. It's a ridiculous thing. So that's based on today's numbers. That's not based on where the forward earnings expand to at the end of next year.
That's fair.
That's based on what's priced in today. It's still under a 30 PE.
Well, that's why the street still has the street has $800 to $1,000 targets.
That's why I'm in the 1,000 camp for the end of next year with Meta. It's just too undervalued. I mean, at today's level, you're paying less than 19 times 2027 earnings.
I think we all agree that Meta's undervalued. The question is entry price, right? Because that's like, if we all think it's 1,000 in a couple of years, then does it matter 570 to 620, or do you just jump in?
I mean, look, if it gets to 1,000, that's what, 75, 80% return.
Yeah.
So
that's a phenomenal return.
So think about it. Let's say it takes 2 years to get there. Let's say I'm overshooting it. It takes 2 years, end of 2027, and it's 80% return. You're telling me 40% a year for 2 years is a bad play? So if you think Meta is $1,000 at the end of 2027, you're going to make 40% a year. You shatter the S&P average returns and you shatter the Q's returns.
It's just, I think the street also knows that it's undervalued here. There's another reason they're not buying it. It's like PayPal, right? Like if we did these numbers with PayPal, it would also probably look stupid, but it's like, there's a reason people aren't buying PayPal.
Yeah, but Meta's actually growing its profitability.
That's fair, but PayPal is buying back a lot of stock. You can't tell me PayPal deserves to be 65.
I think PayPal's a $110 stock.
Why is it a 65? That's my point. Meta is probably an $800 stock.
PayPal is it's a broken stock, not a broken company. It is what it is. Meta's got to do something to change the perception right now. Maybe it's killing Reality Labs.
I think in a couple of years, if there's nothing other than advertising, I don't know if that stock gets to 1,000. I think there's got to be. And I wouldn't bet against Zucks. I agree with you. I think he'll figure out something. He always figures out something. But that is the fear. Google, we knew it would be. Google was stupid this year at 150 because they had this cloud.
It's so stupid.
They had the DOJ thing, but that was like an external legal. Once that went away, it was off to the races.
I mean, think about Alphabet for a sec. Is YouTube more valuable than Netflix, do you think?
I personally believe YouTube is 1 billion times more valuable.
Right. No, but not just because we're on it right now or whatnot, but like in all seriousness, is YouTube a bigger business than Netflix? Because if it is, then what's YouTube worth? Like if you were to spin out all of Alphabet's segments into individual companies, are you still paying a cheaper price today than what the breakup value of the company is?
Dude, YouTube could go public at $1 trillion by itself. I would buy it tomorrow.
I think it very well could. I also think that their cloud business could go public at 500 billion to 750 billion.
Easily.
I also think that Waymo could catch 100 billion, if not more. And then what about search? What about subscriptions and services? Because you got to figure Gemini, where's that go? That's got to go in subscriptions and services. So there's just so many things under the umbrella of Google that the valuation for Google is still probably undervalued at 22 times 2027 earnings.
Yeah, and that's what I mean by seeing explicit AI ROI. Like, let's say it's 2029 and Sundar says we have 1.5 billion monthly users of Gemini. There's no way that the revenues, the cash flows are not going to catch up in a pretty exponential nature. So that's what I mean. Like, in a couple of years, if we see that type of growth, or we have, I don't know how many Waymo rides they've done, but make up another number, like 10x the Waymo rides they're doing today. That's when you know, okay, AI is like actually changing the business. And I think it'll take a couple of years, but once you see that.
Yeah, I mean, it could take a couple of years. Absolutely could. But there are stocks that are undervalued and good plays for long-term investors. Meta happens to be, to me, and Alphabet happens to be in really interesting prices. And I'll tell you, the one that I don't own, I'm getting really close to pulling the trigger on.
Tesla?
I'm getting close to buying Microsoft.
Oh, you got my hopes up, bro.
I'm getting close to buying Microsoft. If it keeps falling a little bit, I'm starting a position.
Well, they're going to make money off the services revenue. Do you know in 2018, that was when they switched from product sales to services, and that's since then the stock has been returning about 28% a year.
Microsoft?
Yeah, since 2018 when they switched, because the old CEO was focusing more on the product sales, selling Microsoft Office and the licenses, and then when Satya Nadella was like, let's switch into services, subscription model revenues, and they basically jump-started all of SaaS. Microsoft was the beginning of all of that. Microsoft is a software player. Yeah,
I know you don't want to hear it. Fabric is going to take the fuck off.
I don't know enough about Fabric, to be honest.
I know a lot about it. It's going to take off. Now, I'm not saying that anything's going to happen to any other companies. I'm just saying that there's going to be a lot of synergies and a lot of companies using it, especially because they're going to compound Power BI off of it.
That's it. That's good. That's bullish for ClickHouse, dude. Like, here's
the thing that Microsoft
ahead.
has that other companies don't. Companies are already entrenched in their environment because all of their information is in Azure and SharePoint, and Power BI just extracts it through Fabric. Those things are going to take off because that's the model that Microsoft is now building.
All right, so we got to end it here. I'm going to ask one question that I haven't asked in a while. Everyone can put their answer in the chat. Steve and Sam can think for a little bit. Don't just say your answer. I want you to think hard about it. I ask this question once every month, basically. So I guess we're asking it for the first time in November. And then we'll be done for the day. Steve and Sam's Twitter, I'm also putting in the chat. Please make sure to follow them there. Steve will be live on Saturday with his Saturday with the...
We'll be live tonight. We'll be live Saturday. I may even go live in a little bit. We'll see.
Okay. And then Sam's YouTube right there as well in the chat. All right. What is the 1 Mag 7 for the next 10 years?
Oh, Jesus Christ. You ask the hardest questions.
No, I ask this every month. It's
such a hard question.
It's not. It's actually, I have my answer already.
I'm going to cheat. I want to see what Sam says first.
It's always going to be Amazon. Always.
Really?
The Mag 7 for the next 20 years. Amazon will always be one of the top companies in the world. Their moat is insane. E-commerce is still growing, even on an emerging market scale. You even see with Mercado Libre. I think Mercado Libre is an amazing buy today as well. E-commerce is going places. They're the largest hyperscale in the world. They're only going to start re-accelerating to next year, most likely. It's always going to be around. It's always going to be around all the time.
What was the time frame? 10 years, you said?
10 years. Do you want me to go next or you?
No, I'm going to... It's really hard because it's between Amazon and Alphabet for me. And I got to go with Sam, and I'm going to tell you why. Because in addition to everything Sam said, I think that at an 11.2% operating margin, they have the ability to get to 20% through robotics and AI. And as a $1 trillion revenue company in 2029, if they can get to that 20% golden margin, as I call it, that's $200 billion of operating income 4 years from now. So I got to tell you, in 10 years, this is a company that could be doing $300 billion a year, maybe $350 billion a year in operating income. Because where's their revenue go in 2036 if they hit $1 trillion in 2029? Are they at 1.4, 1.5 trillion at 20% margin? So for me, it's got to be Amazon.
Okay, so I really want to say Palantir. I know they're not a Max 7, but I think eventually they get to that point. So if I can't say Palantir, I'm going with Tesla, dude.
I knew you were going to say that.
I'm going with Tesla. Amazon and Google are more rational, 100,000%. And if I was pure rationally, it would be like Amazon, Google easily. But in terms of upside potential, I think it's Tesla. I think it's the robots. I think it's self-driving. I want to say NVIDIA, but at some point, the chips stop getting sold, and so NVIDIA can't be putting up the types of growth they were putting up. Tesla hasn't been growing for a couple of years, so Tesla's eventually in the next maybe 2 to 3. We're talking about 10 years, right? So 2036, by around 2029ish, even if it takes 3 years to get back to that S curve of growth, I think that happens, if not sooner. And I know it's a bumpy ride with Elon, but he's incentivized to make $1 trillion. And so I kind of think you let him do it. And then you got the energy business, which we can't underestimate given how much of a power glut we have.
I think the energy business is very underestimated. If you're seeing all this data center expansion and the fact that they're partnered with a lot of med-cap companies when it comes to their energy business and energy storage, I think it's very underestimated. And it's growing at I forget what it was, 50 to 70%, somewhere around there. So it re-accelerated from last quarter. That is a lot of potential there, and I think that is going to bring all the revenue up. Just not an owner.
Yeah.
Of the stock.
Yeah. Amazon and Google make a lot more sense. You can easily see how it plays out. But in 10 years, which one gets you a 5x, 2, 3x? We're talking about 10 years, Max 7 names. I think we're looking for at least a 3 to 4x, minimum 3x, right? Not just a double in 10 years. I think Tesla has a higher probability than some of those. Also, Tesla's still at 1.2, 1.7 trillion or something. Amazon's at 2.3. Google's at 3. Google's, getting up there a bit. It's funny none of us said NVIDIA, though. I see some people in the chat said NVIDIA, but I think to some extent, maybe 5 years NVIDIA, but 10 years, it's okay, can they keep selling these chips at that level?
No one said Apple either.
No one said Apple might be the winner too.
I know Apple might be the winner, as surprising it is, because this thing just always sticks around. Financial engineering, it's a safe haven for almost every single person around the entire world. It might be Apple. Yeah, Evan might be the winner here. Stock market news.
All right, folks, that is it. Thank you all for being here. It has been a wild week, emotional week. Very happy that we got some level of reprieve towards the end of the day as the S&P went green. We actually have some pretty nice after-hours moves across the board. And looks like we're ending green for today. Obviously, Monday is going to be very important. We'll see if we can get this shutdown done by the end of the weekend. Republicans already said they would reject it, so maybe they don't get a deal done. But at least the market is relatively happy that there's a chance they get it done. And if they do, that wouldn't be too bad. All right, that's it. Steve, are you going live after this?
6:30. I just set it up.
Okay, there you go. I'm putting Steve's YouTube in the chat. People can go get his stream at 6:30. And that's what you got. All right, thank you, everybody. Appreciate it. Putting Sam's YouTube as well in the chat. I will see you guys on Sunday for the market futures. And hopefully we can get this government reopened and we can keep this going into next week. Thank you, everybody. Appreciate it. We'll see you guys on the Sunday show. Bye, everybody. Have a good one.